Hey, welcome everybody. It's Walter here from FX Jake and of course Naked Forex Now. I know most of you probably heard about this webinar from the Naked Forex Now forum, and I appreciate your time. We know that for some of you it's late at night. I see Dan is here. Of course, Dan, you're on my time zone, so it's pretty simple. Dom is here. Hey, Dom, welcome. And Lori and Marky. Maceo, hey Maceo, good to see you. Ruben is here, and Ruben F and Ruben Van E, and Steve is here, and Michael, Rasika, welcome Rasika, Alex of course, Amu. Oh wow, this is so cool. Thanks for spending time here, everyone. This is really great. So what I'm going to do is introduce our guest of honor tonight. Many of you know Rob Jessup from the forum. He's posted lots of really great trades on there. And he also has a webpage called the Forex Room, which is a live trading room. He'll tell you a little bit more about that. But today what he's going to do, Rob, I've known Rob for several years now. I think maybe 3 or 4 years, Rob? Has it been that long?
Yeah, it's coming up to about 4, I think.
Yeah, 4, I think. Yeah, exactly. I've known Rob for 4 years, and he's a great trader. And he's going to talk about how he transitioned from a normal job, as we've all had them at some stage, to doing what he does now, which is basically trading large sums of money for a living. And I think this is going to be really fascinating for a lot of people out there who are looking to sort of go this way, or at least explore how it happened for Rob. So I would like to welcome you, Rob, and thank you so much for your time. I know this is kind of getting close to the London Open, so it's kind of a tricky time to be away from the charts, but I really appreciate you taking the time here.
Well, thanks, Walter, and thanks very much for having me, and thanks to everyone who's attending tonight as well.
Yep.
I think what we will do is that I have a short presentation I'm going to go through, and basically what I'm going to do is I'm just going to list the steps or the suggestions I have for anyone who wants to become a fund manager or a signal provider to a large firm or anything of that sort. And what I'll do is we'll go through each page. Each page covers a different area like networking or trading, and we can allow people to ask questions as we go, if that's good with you, Walter.
Absolutely. Yep.
Okay.
Yep.
Okay, great. Okay, so just a little background on myself. I actually, I used to be, well, when I first started trading, let's go this route. When I first started trading, I was actually a supervisor in a warehouse for the distribution company that supplies things to McDonald's restaurants. And so I was working shift work, and I never really had a weekend to myself, and I was always on call, and so I really didn't enjoy that much, and I decided to look for something else to get to start providing some secondary income and possibly a future. And my roommate at the time, who is a fellow trader with me now, and he's doing quite well on his own, introduced me to Forex trading, and that's how I got started. So from it's been quite a journey from that point, and now I'm actually working with a large firm in London and several other clients. So it's been very interesting, and I guess basically I've got some recommendations on how anyone else who wants to do the same thing as me can get there. So we'll go on. We'll start with so the first few points that I have to go over here is first of all, know your system. You can't. I guess I shouldn't say you can't, but it really is a good idea to learn a method of trading you're comfortable with and stick with it. Right. So pick a system, whether it's based on inside bars or moving averages or daily charts. It doesn't matter. But pick a system that you're comfortable with and know it inside out. The second part of that is establish rules Rules are absolutely crucial, and you have to stick to them because those rules are what will keep you from taking trades that you shouldn't be taking most of the time. Those rules include, everything from what setups you're going to take, what time frames, and your money management strategy as well. And then only take the trades that meet those rules. So for me, for example, I've pretty much built my trading history and my careers, at least since, really since I met Walter, actually, based on pin bar reversals or kangaroo tails, as Walter calls them, and engulfing candles or big shadows. And those two patterns have basically been the core of my system for the past 3 years. That which brings me to the next point is don't overtrade. Like if you like for me, I trade typically daily charts, and I find that every time I try to foray into 4-hour or 1-hour charts, I tend to overtrade or take trades that possibly sometimes they can even go against. They don't go in the same flow as my daily trades would. So big factor is not to overtrade. And that is my next bullet point. There is simply about trade one time frame per account, because you want to be as consistent as possible, which is why you establish all those rules. So trade one time frame per account. It doesn't mean that you can't trade more time frames, but it's really difficult to build an account when you're trading daily trades, for example, 1-hour trades and 15-minute trades all in the same account, just because the money management has to be very carefully calculated in order to keep it all in line. And then that brings me to the next part of consistency, which is money management. Money management is absolutely the most important step in becoming a successful trader, in my opinion. You have to establish those rules, as I mentioned above, in money management, so that you can define a maximum drawdown and so on that you're willing to accept, right? So I'll just pause for a minute, and if anyone has any questions, we can go over those on any of what I've discussed so far.
Okay. Does anybody have any questions? So you mainly trade kangaroo tails and big shadows, ask Robert L.
Yes, that is actually, those two setups are the core of my strategy. I've back tested the two of those two setups. I've done roughly, in the last 4 years, I've probably done close to, I would peg it at somewhere around 60 years of back testing in Forex Tester, over different time frames, different pairs, but all of it is based on those two setups, and those by far have been my favorite two setups.
And that's interesting. Did you say 60 years?
Yeah, I would guess that it's upwards around 50, 60 years now worth of data.
Right.
Which is
that's amazing.
Which is a lot.
Yeah. And so did you, just curious, I don't know if I should be stealing all the questions time here, but so based on your testing of the daily and the daily kangaroo tail and big shadow setups, did you find that it was pretty consistent throughout, or was there a bad period, or how would you characterize sort of the performance of those two simple setups on the daily chart?
Well, as long as I stuck to my rules, they were very consistent, and in both my back testing and my live trading, I'm maintaining, well, for 3 years now, I've maintained an 80% win ratio. So yep. On those two setups, one right now is, I think the big shadow is at about 78% win rate right now, and the kangaroo tail is somewhere, it's either 80 or 81 right now.
Yeah, that's exactly where mine That's exactly where mine hover at too, right? Just about 80. So, I mean, it's probably like 79.8 or something, but yeah, exactly.
Yeah, exactly.
Yeah, yeah.
Yeah, it's very close, either for both of them actually.
Right. Yeah, that's right. Okay, so we have lots of other questions here. So the question is it somebody said, Alex said, Emmanuel should think about that. Ha 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 ha. Because Emmanuel, we were calling Emmanuel's webinar recently. He said he back tested for 60 hours getting ready for the webinar. And so
Right.
you're saying you back tested for 60 years. Ha ha ha. That was pretty funny.
Yeah.
So Robert L is asking, is it like you're testing 10 years on one pair and 10 years on a different pair? Or are you saying that you have like 60 years? You know, how do you measure 60 years? Is it?
Well, I know for a fact I've back tested the Euro USD as far back as the data would go, which I think was 11 years.
Yeah,
I believe.
Yeah, that's right.
11, 12 years, something like that.
Yeah.
So I back tested the daily charts right from when the data became available.
Yeah.
And basically up to the present day. And I did the same thing for the pound and the Swissy.
Yeah.
Because those ones pretty much go back.
They go back
the farthest.
Yeah, exactly. Yeah.
And then I've done the Aussie. You know, I've done basically the 6 main pairs. I like the 6 cousins, I call them. So we've got the euro, the pound, the Aussie dollar, the Swissy, the yen, and the cat, the loonie. And out of all of those pairs, the only one where I found my results weren't quite as good was actually on the yen.
Right.
USD yen.
Yeah.
And I think my win ratio was slightly lower on that pair. But overall,
I agree.
I've done right back.
Yep.
So.
Yep. Yeah. Okay. So that makes sense. Yeah. So you've done your testing clearly.
Yeah.
So we have here another question. So when you say on time frame, do you trade the Dapper Dan wants to know? Do you trade like the 4-hour and the daily for trend direction? Okay. So do you use any sort of trend direction in your trade setups, or are you just purely going, okay, it's giving me a setup, whether it's with the trend or against the trend, and I take it?
Yeah, that's exactly right. Like, especially, I like to trade the big shadows with the direction of the trend more than as a reversal. So, you know, I'll look for example, a bullish trend and a pullback. You know, say based on a Fibble level, or a break through a zone and then a pullback to a zone sort of thing. And if and then continue one that will allow me to continue my trade, like the trade with the direction of the trend. As far as kangaroo tail goes, I will take either way as long as the setup is on a zone and it meets all my criteria, right? So I just find that the kangaroo tail or the pin bar reversal works in both directions. I guess for me, it's just a little bit more clear that the market wants to turn around.
Yeah.
Or continue, right? So I find the big shadow or the bullish or the sort of the engulfing pattern, I find it to be a little bit, unless it's like the loonie, like today's USD CAD. I mean, there was no question that was an engulfing candle on the daily chart today, right?
Yep.
So, but a lot of the time, I just find that the engulfing candle, for me, sometimes I'm just not as comfortable with it. It's a little bit questionable to me sometimes, even though it meets all the criteria. I just tend to like to trade those with the trend rather than against it.
Right. Okay, that's fair enough. And so I often refer to your amazing back testing that you did. I remember when I first kind of met you, you said I think you were testing the Euro daily chart, and you were risking 2% on a $10,000 Forex tester account, and it went to like 1.8 or 2.2 million or something like that. Is that right?
In the end, it was somewhere around 11 to 12 million, actually.
And what were you testing
Yeah.
then? And so just to
Uh,
for the record,
I
because
would.
I always talk about this and people ask me all the time. So for the record, what were you testing?
I was testing. I did one run of all of only big shadows. That was my original testing when when I took the $10,000 account to 3 million, I think, which is when we first discussed it.
Yeah.
That was all based on the big shadow.
Yep.
And then I went through and I did it again with the kangaroo tail, and that was when I turned it into 11 million.
Right.
So, and I think a lot of it was just that it may have been because I now knew kind of like maybe the results were better because subconsciously I kind of knew where the zones were.
Yeah.
But basically, I just as we reached a new price area, I would just I would look back for a zone, right? So
yeah,
I didn't really change the way I tested. It's just that for me, I kind of feel like I sort of knew where the market was going, so it might have skewed my results a little bit.
Right.
But I basically, the thing was that's how I developed my rules for trading was through all that back testing. So
yep.
It's definitely an excellent tool, that's for sure.
Yeah, sure, absolutely, absolutely. Okay, so we have a few more questions here about your trading. So, did you find that they were more profitable in a certain time frame? Asked Marky.
Not necessarily. It's just for me, I prefer to trade the higher time frame charts, like the 4 hour and the daily. My preference is to trade the daily charts. I just find that for me, it's very clear most of the time on the daily charts, whereas when I get into the lower time frames, it's a little bit. I guess the way I describe it is that it seems a little noisy to me.
Yeah.
So it's visually noisy.
Yeah.
But I definitely prefer to trade daily charts over any other time frame.
Okay, fair enough. And Dom wants to know about your parameters. Do you have parameters in place if you ever find yourself getting emotional or slipping from your rules? Also, if you find yourself going through a particularly bad drawdown period, how do you deal with that?
I do have parameters in place. For example, if I hit a 10% drawdown in 1 month, I stop trading.
Yep.
Doesn't matter if it's in the first week or the third week. If I hit 10% drawdown, then I'm done.
Yep.
The other thing that I do is I tend not to. A lot of people talk about, should you reduce your risk if you're losing streak and so on, and I don't do that. Because the next trade might be the winner, and if you put half as much on it, you're not going to recover as quickly, sort of thing. And yes, you might lose more, but as long as you're still above that 10% mark, you're good to go, sort of thing, right?
Yeah. Yeah.
So and then
keep your risk.
Sorry, what was the second part of the question?
The other part of the question was, what do you do? Okay, it was the second question was, what do you do when you have a bad drawdown period? How do you deal with it? And the first part of the question was, what do you do if you find yourself getting emotional or sort of ignoring your rules?
That's when I really go back to the tester. When I start to get emotional, I know I've spent too much time in front of the charts, and that happens. And it actually, I went through a period like that within the last few months, simply because I started a live trading room and found myself in front of the charts way more than I'm used to, right? So I found myself getting frustrated because my trades weren't working out. But when I went back and analyzed them, it was because sometimes I was not taking trades that met all my criteria. And so basically all I did at that point was recognize what the problem was. And in this case, it was pretty easy. I was simply over trading. I was spending too much time in front of the charts.
Yep. And
went back to my core. So I went back to trading pretty much strictly daily charts.
Yep. Okay. That's fair. We've got a few more here, Rob. Do you Do you consider fundamental reports in the historical data, or do you just trade technically? Asked Robert L.
I don't like to consider fundamental reports, but lately it just seems like every day there's some panic either in the euro or the US or something that in Eurozone or the USA that seems to just kind of throw the markets into a tailspin or something. But mostly that's on the lower time frames. Like one of the reasons I like trading the higher time frames is that I don't have to pay attention to the news as much, the fundamentals.
Yeah.
I still do. I still do certain things. Most of the ones are, they're the big ones, like the non-farm payroll, and I'm sure that this European summit that's starting, there's going to be little tidbits getting leaked out of there that are probably going to have traders going one way or the other. But overall, it's really not a factor for me.
Yeah. Okay.
I consider myself to be a technical trader, and that's what I base all my trades on.
Sure. And you don't like when you do your Forex testing, you don't actually go back and say, oh, well, the non-farm payroll came out today, so I'm not going to trade this kangaroo tail, or you don't do stuff like that, right?
That's correct. No, yeah. I don't do any of that. I trade purely based on what I see on the charts.
Yeah. Okay. And Dan says, which pair do you find the most reliable on the candle formations? Is there a certain pair? You did mention that you didn't like the dollar yen on, and I agree with that. It's something that I found too, particularly on the dollar yen. Sometimes it will throw up formations and that they don't have the same success rate that other currencies seem to have. But is there any currency that you find to be exceptionally reliable?
I really like gold. XAU USD. I really like the gold pair. I don't get as many setups on it on the daily time frame, but when I do get one, to me it's almost like money in the bank.
Right.
It's if I see a pin bar or an engulfing candle form on gold at the right place, I'm all over it.
Yeah.
And probably I think the next best one might be the pound, because it's not as influenced lately. At least lately, it's not influenced as much by the fundamentals. Yeah. So, you see a setup on the pound. A lot of the time, I feel confident taking a trade on the pound, probably a little bit more so than the euro sometimes.
Yeah.
And next to that, I would think my next favorite pair would probably be the Aussie dollar.
Sure. Okay. And then Robert says, you must use support and resistance. How do you find these levels when the data just comes out? So I guess he must be talking about like in Forex Tester, I'm assuming.
The only way you can do it is like when I first started testing in Forex Tester, I basically allowed the thing to run for about 6 months, I think it was, so that it would start establishing some zones, right?
Yep.
And as we progressed, as the years progressed, I simply was able to identify more zones. It's very similar to how we look at our charts now. If we're, I think it was what pair was it just recently that hit like an all-time low?
Are you talking about the Euro Aussie or?
Yeah, I think it was the Euro Aussie hit an all-time low.
Yep.
And so there's no zone down there, right?
Yeah.
So in that case, it's a little bit. That's where you simply have to sit back and wait, in my opinion. And it might take, if it stays down there and it goes back and forth a little bit, then it will establish a zone and you'll be able to see it. But when you first enter a new area, I just simply stay away from it until it's visited that area more than once.
Right. Okay, that's fair. Dan's asking about your testing. I think he was saying what time was it when you were testing in Forex Tester and you ran that account up to 11 million or whatever?
It probably took me about 2 years to do all that testing because I just didn't do it straight through. Like the first time when I did the big shadow, I actually did all that testing in about 3 weeks, I think it was. Like
Right.
I spent just hours and hours and hours in front of Forex Tester, like way too much actually.
Yeah.
And then the rest of it, I've basically I pretty much just continuously test. Like a lot of the time, for example, when I was having a little bit of a bad run here recently, I went back to Forex Tester and said, okay, I'll rerun some data and see what I come up with.
Right.
And a lot of the time when there's nothing on the line, going back, that's one of the things in Forex Tester. Like there's actually nothing on the line. It's not a demo account. It's just a test account, right? So you go in there and you remove any emotion that you might have about trading because there's absolutely nothing at risk, right? So then you simply trade what you see, and it kind of clears my head, if you will.
Yep.
So it's a great tool, and it's something that I will never stop doing because it's basically, that has allowed me to get to where I am now.
Sure.
Is having the ability to backtest my strategy like that.
Sure. Yeah. Yep.
Yeah.
And that testing was like from the euro from like 2001 to 2008 or something like that. Like that's.
Yep. Actually, yeah, it was 2001, and I think Forex Tester it's available up to 2011 now.
Yeah.
So yeah, I think the last time I downloaded the euro data it was 2011. Actually, it might even be into 2012 now, but I know it's good to at least 2010 or 2011.
Right. Okay. Dan's asking for a demo on the tester. I'll give you a link to a video, Dan. So if you want to see how that works on Forex Tester, can you?
It's pretty slick. It's basically just MT4, in a nutshell, right? So
exactly. Yep. Can you explain? Rasika says, can you explain a bit on how you manage the trade once it's entered, like the targets especially? A problem most new traders have is even when we enter at good price action candles, hoping it will move in our direction most times, we return back and hit break even. So what do you have to say about that?
Well, one of the things, especially as a new trader, is a very common mistake for new traders, and I was guilty of this as well, and even now I still am sometimes, is that is once you set the trade, if you set the trade based on the rules, it either hits the stop or it hits your target. Unless something happens, like sometimes you'll see a trade and you'll get into a trade and it'll just, like on the daily chart, you might enter a trade and 3 days later it still hasn't hit your target, and then suddenly you get, a big opposing candle, for example, an opposite direction. Then you might want to consider closing the trade, or for example, right? Or if it, a lot of the time what I do is if I set it if the price goes more than about 70% to my stop, then I have the chance to, I will take the trade off, because typically if it cracks that 70% level, it's probably going to continue to go. It's like, especially if it closes, if you get a candle close below the 70% level sort of thing, or beyond the 70% level, then there's a very good chance it's probably going to take up your stop. But 99% of the time, or at least 90% of the time, I guess I could safely say, it either hits my target or it takes my stop out.
Yeah. Okay.
And one of the reasons, like I know Walter and I both trade in a similar method where we look for some profit and then we'll move our stop up to break even and wait for more profit. And that's, for me, that's really worked well, because it allows you to, even though some people will argue that you're not getting, 1-to-1 out of your first target because because you still have a half a set of lots on or something like that. There's a lot of times when that second set of lots will run and give you 3 or 4 or even 5 to 1, and you never would have done that on just one target sort of thing, right? So I think it's an excellent money management tool, and one thing that new traders need to be comfortable with is just allowing their trade to work out.
Yeah. Yeah, I mean, that's one thing that's great about the daily charts, isn't it? It sort of teaches you patience, to wait for that. It's so tempting sometimes, and I get emails. People say, "Oh, look, we have a kangaroo tail on the Aussie." Well, yeah, but we haven't even finished the Asian session yet. That sort of thing. Yeah. And one thing that, and I'm not making fun of anyone. It's just that it really teaches you to wait for trading the daily charts. Really teaches you to wait through all 3 sessions. You got to give Asia a chance, Europe and North America a chance to do its thing on that market, and then at the end of that, then we see where it settles. So, and the same thing with exits, actually. Like you're saying, you're in a trade, and it looks like today it's going to reverse and go against us. Well, let's just see where the daily close is. Let's see what happens at the end of New York and see if we don't in fact have another candle continuation in our favor. So
exactly.
It's good. I think
I've had trades come 1 pip from taking me out because and had I closed it, I would have lost out. But they've come 1-2 pips from hitting my stop and turned around and hit my target the next day. It's just like whatever time frame you're trading, you have to wait for that candle to close. And one of the reasons I really like trading the daily charts is that I can set my trades and check them about every 8 hours, and that's it.
Yeah.
And sometimes not even that. Sometimes it's just I check them at 5 p.m. I'll set them before I go to sleep, for example, and then I won't check them again until the next day at 5 p.m. Right? So that really teaches you the patience that Walter was mentioning, but it also teaches you to allow the trade to do what you want it to do, right?
Yeah.
Or what you expected it to do.
Yeah, sure.
I find that's one of the reasons I'm not a big fan of trading lower time frames, because I find that on the lower time frames, and this is just for me personally, is that I find it very difficult to watch a trade go up and down. On a 1 hour chart in say London, in the London 8 hours that London is open, a trade can go, price can move 100 pips in both directions, and I'm sitting there, not knowing which side of it to be on, sort of thing, right? So especially when you're used to trading the daily time frames, you can't really mix and match, sort of thing. I find it very difficult, me personally, to just sit and watch a trade.
Yeah, sure.
I think babysitting the trades too much allows too much opportunity for emotion to creep in.
Oh, I totally agree. Yeah.
Yeah.
So we've got a couple more interesting ones here. There's a question here. I want to make sure that everyone gets an opportunity. Dom says, do you ever feel like in years to come, your trading concept will have to evolve with the changing markets, or are you confident with how it is and how you're trading now, and that you're going to maintain that over the long haul?
I'm confident with the way it is, and the reason for that is the amount of backtesting I've done. People say all the time that the markets have changed since 2000, and I think actually electronic trading started in 1996 or 1997 for the retail trader, and nothing has essentially, other than there's more retail traders in the market, essentially nothing has changed. The setups that I use they use on stock, they work on stocks, they work on options, they work on Forex. You can pull up just about any chart of anything that is chartable, and you will find the same setups right across the board.
Yeah.
So although there may be more people trading, or markets will make an even bigger shift into electronic trading, the core principles of trading will essentially always be the same, because there will always be buyers and sellers, and the patterns will always typically tell us where the price is going next.
Yeah. Okay, and that's great. And Steve W says, can you tell us more about how you transitioned from working full-time to a fund manager?
Sure. Yeah, I'll move on to the next slide here.
Yeah.
So to be able to go from basically a warehouse worker for anyone to actually that wants to become, to transition from a retail trader to an institutional trader, your track record is absolutely the most important thing you can do. And your track record needs to be consistent, and it needs to be at least a couple of years in length. So no matter how big or small your account is, whether you have $300 in the account in the beginning or $30,000 in the account at the beginning, it's not necessarily about the money. It's about the pips and the growth of the account. So when you want to make a transition from a retail trader to an institutional trader, what they want to see is they want to see that month in, month out, you are able to produce a profit, right? So that's why I say it's not really it's about the pips, not about the money. Because for me, it's about, I strive for a certain number of pips every month, and I also strive for a certain percentage. And for me, I strive for a very modest 10% per month. At least that's modest in my in my eyes anyway. So with that live track record, you can switch brokers, you can change brokers, you can change your method, you can do basically whatever you want to do. But in order to make that transition, those records need to be available for as long as possible. So if you switch brokers, make sure you keep your accounts open. It doesn't matter if you leave $50 in the account or $25, but if you leave some funds in the account, then the broker has to keep those records available, and then those records can then be verified. A lot of brokers now will they're kind of like the tax man. They will keep records for as far back as 7 years, and then they will scrub them from their system if you don't ask them to keep them live. So it's very important to keep a running track record and make sure it's verifiable. The other option, there's all these new, I call them social networking or social trading services now, like FXStat or MyFX, or I think there's one called Tradebook, and there's so these services allow you to just simply link your trading account to their system, and that can be verified. Like FXStat, for example, if you have confirmation through FXStat on a live account, that is actually it's actually licensed by the authorities in London. So the trading authority in London actually recognizes FXStat. And then, like I said, a minimum of 2 years of active history. So you need, if you keep it with the same broker, it's even better. But as long as you can have 2 full years of track record, that is the absolute minimum before anybody will even consider offering you a position as an institutional trader. So that is basically the first step. The first step for every trader who wants to become a money manager or a signal provider to an institution is to make sure that you maintain a profitable, consistent track record for a minimum of 2 years and maintain those records continually going forward. The next thing, actually, we can go back. Did anyone have any questions on any of that?
We do have one here from Rasika. Says, how many months or years did you trade before having consistent profits? What did you do, to not give up until you became consistent?
I started trading. Let me think about this now. I started trading in roughly 2005, and I traded for about 2 years or 2.5, maybe even 3 years, miserably. To put it mildly, I made every mistake in the book. It's nothing new, and I blew out a lot of money in accounts because I thought I knew how to do it, and so on. And once I actually got to the point where I truly understood price action, and I truly understood the importance of money management, and I truly understood the importance of sticking to rules. It was like somebody flipped a switch, and suddenly I was a consistently profitable trader. And so for me, I've got a little over 3.5 years total of verifiable trading history where I've shown consistent profits. So, and that's actually like all they actually when I was asked if I was interested in joining the firm in London, they wanted the last 2 years. But if they didn't like what they see on the last 2 years, they probably would have asked me for the third year, for example.
Right.
So it really is a long term. It's kind of your end game is not 6 months. It's actually years that you have to take into consideration.
Yeah, sure, that makes sense. There's one here on do you use fibs, Elliott wave? I'm always drawn to the lure of something more exciting, says John. So do you use fibs and Elliott waves in your setups, or?
I do take into account Fibonacci levels quite often. I really like, for example, when you're in a bullish trend or a bearish trend, and price pulls back to one of the key fib levels, like a 38.2 retracement and then a kangaroo tail on a zone forms, right? Like those are the setups that to me are excellent setups. But I don't use Elliott wave. I do use a couple of moving averages, but I find that I'm really just looking at how price is reacting to those moving averages. I don't really find that they influence whether I'll take a trade or not. In fact, more and more lately, I'm kind of ignoring the moving averages because it's really about the price action for me.
Right.
But yeah, I try to keep it very simple.
Okay. Cool. All right. Thanks.
Yep.
All right.
Okay.
Yep.
So the next thing I have to discuss a little bit here is ways that you can kind of get your foot in the door to get started. So, for example, with a managed account, one thing that the institutional firms like to see is that you can manage someone else's money other than your own with little emotion and with consistent profit. So some of the things, like one of the things I did is I went to some of my friends, some of my family, and said, "Here's my track record. Would you be interested in investing a little bit of money with me so that I can build a reputation, sort of thing?" And I was lucky enough to have a handful of people that were willing to do that, and actually they're happy because they're taking some of their savings accounts and turning them into some pretty nice returns. So the other thing one can do is you can offer to some you can join one of these services where others can copy your trades, and then once you have that track record, these are all things that you can do. There are firms out there that offer the "you trade our money" kind of scenarios. Usually they're typically private investors or groups of private investors that are willing to. They have risk capital that they're willing to take additional higher risk than say keeping it in the bank, for example. and then again, yeah, that brings us to private investors, and then get creative. As long as it's legal, however you source out your managed accounts or your trade copier accounts, so on, it's really about getting a little creative, right?
Yeah.
For me, like I said, what really kickstarted it for me was once I was able to show those couple of years of consistent trading history, my friends and family actually started coming to me. So it actually, it progressed quite well. So,
Sure.
Any questions on any of that?
Yeah, Dom was asking. Dom says, did you go and seek investment from family and friends on the advice of these financial institutions, and they recommending you do this, or was it a coincidence that they'd like to see this step taken first?
It was just a coincidence. Actually, my trading progressed into far more than I ever expected it to, and I didn't really ever consider that I might someday be a fund manager. All I was ever looking for was to turn my savings or my personal money into enough that I could actually live off of that by trading, right? I never really considered any of the things that I have going on right now. I never thought that I would have a website. I never thought I'd have a live trading room. So it really was just a big coincidence. And when I was so-called discovered, it was all of these things added together that made my what they call the trader profile very appealing to an institutional firm and to a lot of investors. So it really was just kind of a happy coincidence the way it all worked out.
Right. Okay. You mentioned you're going to be working for a London hedge fund. Have you had to close your current fund to work solely in London? Asked John.
No, I don't. No. At the moment, the agreement that we have is that anything I have in place prior to joining them, I can maintain, and I can take on clients, for example, personally, as long as it doesn't interfere with, as long as there's no conflict of interest or it doesn't interfere with my trading for them.
Right. Okay, that's fair. Yeah. All right.
Okay. I think there's one more.
Okay.
So the next part of it that I felt was quite important was networking and how to get noticed. How can I take all these things that I've been putting together for the last 2 or 3 years as a trader? How do I get that information out there so that I can start attracting investors or so that I can get noticed? And one of them is to join trading groups. Naked Forex now is an excellent forum, and I think that there's some really great traders that are on the forum. I actually wish I had more time to spend on the forum myself. But trading groups, there's all kinds of trading groups. Forex Factory is also another one that has a pretty good forum there. But most of those are retail traders, and really it's just about kind of creating a name for yourself and learning from the other successful traders that are there. You want to create a positive trader profile, which is kind of basically encompasses everything that I've been discussing up until now, which is, how did you get your experience? How long have you been doing it? What's your track record? That sort of thing. And one excellent thing, actually the one single thing that, as far as social media goes, that has really boosted my presence is LinkedIn. LinkedIn is actually the reason I was offered the opportunity to work with the firm in London, because another LinkedIn member so-called discovered me on LinkedIn, and he's actually my partner now with the Forex Room. It was him and I that established the Forex Room. And so through his contacts, he was actually an financial expert in London. And so through his contacts, That was kind of how it all came about. And I've been contacted more times through LinkedIn with business propositions related to trading than any other social media whatsoever.
Wow.
And it's free. Like Facebook and Twitter, it's free. But I think the difference is that LinkedIn, the people that are on there, they're legitimately searching for other legitimate sources, sort of a thing. Whereas Facebook and Twitter, there's a lot of information on both of those that really, it's good, but it's not. I don't think Facebook is really seen as anything more than a marketing tool, more or less, right? So
yeah.
The other thing is, so kind of expanding on that is one of the things I did in here was also I started a blog that I started posting my trades and my analysis on, which led to actually being discovered by Daily Forex, and I provided analysis to Daily Forex. And so it's actually quite impressive how a lot of these websites actually scrub the internet for other for people who know what they're doing but haven't really been discovered yet, sort of thing, right? And then I'm always looking for opportunities to expand, so it's just really about networking. And then the new social trading programs that a lot of the brokers are offering, and that other private firms are offering, again, such as just like FXstat, for example. So all of those things combined kind of build up your trader profile, and when you put it all together, it really, I think, if you really establish a good trader profile, it's just a matter of time until you get noticed.
Right. Okay. Cool.
So, any questions?
1 second here. You mentioned Dom says he prefers naked Forex over Elite Trader, Trade to Win, and Forex Factory. That's cool. Thanks, Dom.
That's good. That's good.
Yeah.
I do too. I think Naked Forex now is an excellent forum, and the one thing I really like about Naked Forex now is that everybody that's on there is a trader. We're all just trying to expand our trading ability. A lot of the stuff that's on the Forex Factory, for example, is just marketing.
Yeah. It's gone commercial. I enjoyed Forex Factory. To be honest, I don't really go to those spots anymore. The ones that Dom mentioned, Trading to Win, Elite Trader, Forex Factory. I don't go to them anymore because at Naked Forex we kind of have this community of people that kind of see things similarly, and everyone's really positive and helping each other out, just like you're saying, Rob. And that's really that's kind of why I go to forums, or why I used to go to forums, because I wanted to throw ideas out there and learn things and work on things together. And a lot of these other forums, you seem like you're getting hit with different things that are not necessarily wanting to help you out, but they just want to, I don't know, tell you that they're the best, or tell you why your system won't work, or you know what I mean? Like it's just crazy. So it's like
it's a lot like pretty much any anything that's on the internet that's open to comment, you have to deal with all the haters and all the marketers. So,
exactly.
The nice thing about NFN is that we're all there for the same reason. So.
Yeah, exactly. Cool. All right, so you've got okay. So here we've got some more comments here. I think it's just some more Forex Factories. Yeah, I personally think if you're new, you're only shooting yourself in the foot, because there's probably too much material to get lost into. You don't know what to read to believe. Yeah, right.
Mm-hmm.
Because you don't know which works and what doesn't. I feel you can prolong your learning curve. Yeah, that's true. And really, you talked about this, didn't you, Rob? Dom brings up a good point, which Dom is saying, when you're going to these forums, it's easy to get weighted down. It's kind of like what I did, when I decided I wanted to become a trader, is I went and I read, I literally left the country and I read books for a year.
Wow.
I read all the trading books from interlibrary loan I could get for a year, and I didn't do anything other than in the morning I'd get up, I'd go down to the beach, I'd go surfing, I'd come home, I'd read my books that I got, a stack of books from. They all knew me at the library. I got all these interlibrary loans from all around Australia, and I read every book I could get. But the problem is exactly what Dom is saying, and you touched on this too, Rob, which is really all you have to do is get good at something. Just get really, really good at you're good at like two things. That's
Yes.
all you need
Yep.
is to get really, really good at a couple of things. Make sure you're rock solid confident in it because you've tested it over years and years, and then you're ready to go. I mean, you can always add more later, but in the beginning, what Dom is saying is so true, which is it's so easy to get bogged down. I mean, when I read all those books on trading, one month I was going to be a GAN trader, and the next month I was going to be a moving average trader. You know what I mean? Like I couldn't decide what I wanted to do, and then the next month I'm using stochastics, and all that stuff is can be crazy. When it doesn't mean that I'm not saying we can indicators are not the way to go, because obviously indicators can be really cool. But all I'm saying is that if we simplify things and we focus on one or two things, we're going to be way better off long term. And I think you would agree with that, right, Rob?
I agree 100%, and I actually have an excellent example. Is that the guy whose name is also Colin? His name is Colin Taylor. He's a really good friend of mine, and he's the guy that actually introduced me to Forex trading. And him and I were, we worked on trading together for a couple of years, and my thought process was always, let's pick a system and really tear it apart and really get into testing it and so on. Whereas his mentality was a little different in the beginning, in that he would try a system and literally a week later he'd be onto a whole new thing. And so I became extremely frustrated with this because it just seemed like every time I found something that would start to actually be promising, we'd be shifting gears again. And so it really, like for example, when I discovered the personal trader program from Walter here at FXJ, is that I had a lot of that knowledge. I had picked up a lot of that along the way, but I had never had it presented to me in a way that really made sense.
Right.
And so I had all these tidbits of information, kind of like Walter. I did a lot of reading and I did a lot of surfing, looking for information on the internet and so on. And I just never really had all the pieces to the puzzle in a way that I could really sink my teeth into them. And so the big thing for me came in that, one of the things I've always said to Walter is that his psychology test on how to identify the style of trader you are actually made all the difference in the world for me. Because up until that point, I was, one day I'd be trading 15-minute charts, and the next day I'd be trading 4-hour charts, and a day later I'd be trading, 5-minute charts, and so, and because of that, I could never get consistent results. So it really is about pick something you're comfortable with, whether it's naked trading or not. Pick something you're comfortable with, and prove or disprove the method, and then just stick with it.
Right. Yeah, that's great advice. Dom says, do you only have one system you trade? If so, how do you find it performs during ranging markets?
Well, see, that's the thing, is that a lot. If we're stuck in a range and we're not going anywhere, I'm not trading.
Right.
And for me, for me, one of the reasons that I had a little bit of a slump recently was that I was trying to trade during market conditions that normally I knew I should be staying out of, right? So for me, the thing is that I trade daily charts, and if all the daily charts are going sideways, then I'm simply not trading. And what a lot of new traders don't really understand is that flat, if you will, is a position as well. Like knowing when not to trade is probably just as important, if not more important, than getting, knowing when not to have a trade open is just as important as knowing when to have it open.
Right, right, yep.
Yeah. Like over the summer months, we didn't get a lot of setups based on my two favorite setups, and that is typical actually. The summer months can often be low volume and kind of blah months, right? So in fact, last year the only losing month I had last year was August. So
Yeah.
Yeah. And then this year I kind of had a replay of that. July and August really weren't my best months. They were basically break even for me, and I should have known, the markets aren't doing what I want, so just stay out.
Yeah.
But these are things that even even though I've been trading for 7 years now, I even tend to forget them sometimes, and that's why it's really important to have those rules and to have those rules somewhere where you can see them and remind yourself what they are every once in a while.
Yeah, that's fair. Yeah. Okay, so are there any other anyone else here have a question for Rob while he's here? Are you a big believer of opening a position only if the risk to reward ratio is right, even though your target is 1, is in 0.5 reward of your risk, for example?
I tend to like my preference is to get 1-to-1 out of the first target. A lot of times it doesn't quite work out that way. Sometimes you'll get, like 7, let's say it's this, 0.7 or 0.8% to 1. But, if it's anything less than that, I really don't like to trade it. I would simply just set the target. I prefer to wait to take profit. So my first target, I always try to make it as close to 1-to-1 as possible.
Right. Okay. And do you, Dom says, thank you. What percent of risk do you place on each trade? Asks Steve.
I pretty much have stuck to the same pattern for the last 3 years, which is I usually open my position with 2 separate lots or 2 separate sets of lots, and I'll put 1% on each one.
Oh, okay.
So I risk a total per trade of 2%.
Okay, cool. And Dan asks, would you say that the 4-hour time frame is reliable, or is daily only the way to go?
I don't. It's not really fair to say it's unreliable. It's really about what you're comfortable with, because if you get in sync with the 4-hour markets, you can do very, very well. For me, the daily time frames in the beginning actually were because I was working a full-time job, and so the daily time frames allowed me to trade and work at the same time. But now it really is my trader makeup or my psychological profile is more comfortable with the higher time frames. So I just feel more. I mean, that's basically what it is. I feel more comfortable with the daily time frames. Whereas my partners, for example, who trade with me in our live trade room, both of those guys are very short-term traders. One guy trades 5-minute charts and 3-minute charts or something, and the other guy trades 15-minute and 1-hour charts, and that's because that's what they're comfortable with. So it really is about I don't think any one time frame is more reliable than another. It's just what you get in tune with.
Right. Okay. Cool. And speaking of the Forex room, you've got 3 there. So there's 3 traders in the room. You and there are 2 other traders. Is that right?
Yes. Yep. There's myself, of course, and typically what I'm doing is is I'm looking for, a minimum of a 1 hour entry in about 1 hour after the London Open. But the other two guys have got their own systems as well. One of them, his name is Greg, and he trades 15-minute and 1 hour charts. Most of his trades are based on moving averages and how price reacts to those moving averages. Whereas Tim used to work for TD Ameritrade, and he developed his own system based on tick charts, which is something that in MetaTrader we don't actually have access to. But the tick charts, it really isn't relevant to those of us following him because the prices are still the same. Right. But they're very unique trading methods, especially considering the way I trade, which is very clean and simple. So it's quite a dynamic.
Yeah, right. And so we were talking earlier before the webinar. You were saying that just what's a typical day or typical week for these guys in the Forex room? I mean, I know you might not be trading every day, but these other two guys are, right?
Yeah. Well, Greg tends to average probably between 60 and 80 pips every single day, taking 8 to 10 pips on each trade. Tim is roughly the same. Tim usually looks for roughly 10 pips or 10 to 20 pips off of he uses like 6 pip or 8 pip or 10 pip stops. So they're using very tight stops and they're looking for pretty quick profit, but they still add up to a lot of profit at the end of the day. Whereas me, for example, I called 2 trades last night, both of them with one was a 25 pip stop and one was a 30 pip stop, and we ended up with 119 pips total. So we're probably averaging. We're still working on actually being able. We're trying to get it to the point where we publish our results every day. But with 3 traders, it's been a bit of a challenge. So we're compiling all our results, and it's looking like we're working out to a minimum of about 100 pips a week, and sometimes as much as 300 to 400.
Right. Okay. Cool.
Yeah.
Excellent. And so, so you're inviting the people here if they want to go to the Forex room, right? Is that?
Yeah, absolutely. If anyone's interested, we're going to offer a special introductory rate. It'll be $50 off our normal rate, and it also includes my signal service at that price, which is usually a $99 value. And so basically the whole package would be $99 a month for the first month, and then if you choose to stay, it would go to the regular price. But that introductory price would only be for anyone here at the webinar.
Right. Okay. All right. Cool. And I'm also gonna, if anyone who wants to join the Forex room, I'll also invite those people to 3 webinars where we'll talk about using a quick well, you can use it on the 1 hour or the 4 hour. You can use it on any time frame, but I'll trade it on the 1 hour and the 4 hour as well. So we'll do 3 live trading webinars as well for any of the people that are here and want to join the Forex room. You also get that too, so you'll get invited to those 3 webinars with me as well. So, is the Forex room going to be open all the time, or how does that work? Like if I live in Asia and I want to join the Forex room, what is that? It's open only during certain times, right? Or how does that work?
Yeah, we trade the London Open, so we open a half an hour before the markets in London Open, and we trade for about 3.5 hours.
Got it.
We have actually we have a few members from Singapore, and it's perfect because I believe it's about 5 p.m. their time when the market opens. So,
yeah, it's great for them. It's a great place to live. Yeah.
And excuse me, and we are looking at branching out into having a room for the New York session as well.
Oh, okay, cool.
So if we get enough interest and enough request for that carryover room into the New York session, we eventually will have one open. Between the 3 traders that we have, we can certainly cover both sessions.
Okay, cool. Um, and there's a question here from Robert about the money management. He says, "What are the most important things? Can you break down your money management tips? What are the most important things to stick to, and what do you recommend to really, stick to strictly?"
I think the most important is identify a risk level that you're comfortable with. So if you have, whatever your account size is, identify how much you're willing to risk on on average, on average per trade. So that's number one. So if you're like for me, I'm comfortable with 2% of my account on every trade. No, and I don't deviate from that. Unless, for example, I have, 2 or 3 trades open already that aren't covered or at break even, then I sometimes will cut my risk in half. But 90% of the time I will trade 2% on every trade, but I will never go over that 2%. The other thing is have a maximum allowable drawdown that you're comfortable with each month. And so for me, it's 10%. If I draw my account down 10% in one month, no matter if it's the first week or the third week of the month, I stop trading for that month. I do not trade live money anymore. And I think those are probably the two main mistakes that a lot of traders do make, is that they don't identify those up front, and they just, a lot of times a new trader will come in and they'll throw 5% on one trade and 3% on the next trade, and so on. And it's just like everything else. You need to be consistent with
it. Yeah. I had a student send me a backtesting report this week and was really upset that and I use quotes here, was a break-even trader. And I looked at this backtest. I said, well, wait a minute here. I said, number one, you're only trading one currency pair. Number two, each trade was an X number of lots, which meant, if you're trading one standard lot on every trade, you have a 300 pip stop and a 100 pip stop, your risk is all over the place, right?
Exactly.
And the third thing I said was, even though you didn't have your risk right, like what Rob's saying here, you still made 40%. So I said, that's insane. I mean, what did I think the expectations were, we're going to double my account every month or something like that. I said, if you find a mutual fund or a fund that you can make 40% a year on, good luck. You know what I mean? Like,
yeah.
So, and once you get your risk down, it's even better. Yeah.
That's a very good point, Walter. A lot of the people say to me, well, you're only going for 10% per month, right? But if you look at that over the course of a year, if I make 10% every month, I'm making 120% return on my money. Yeah. And you show me a fund that's, at Lehman Brothers or something, for example, that gives you anywhere near that, and I will gladly turn my money over to them.
Yeah, exactly. Exactly.
But 120% per year. I have people invested with me whose accounts have doubled twice in the last 2 years now, and they're absolutely beside themselves, because the best they could do with any other investment was 4% or 6% sort of thing, and that was over the whole year.
Yeah.
So one of the things that traders need to have is realistic expectations as far as how much they're going to make off of a starting balance, for example. And a lot of people can make more money. Like, for example, my risk is 2% per trade, but if you're comfortable with 5% per trade, then you might have the option of making 50% on your money every month, but you also have the option of the potential of losing 50% of your money every month, right? So it really is. It really is. It's a two-sided coin, and it really has to be what you're comfortable with.
Yeah, I mean, that's exactly it. Dan is asking, what would be a realistic goal? Well, I mean, Rob just mentioned, like, here's the thing. To me, the amount of money that you put on a trade and your trading psychology, that's the same thing, right? Because if I get really emotional, if I put 5% risk on a trade and it goes against me it goes half of the way to my stop. So now I'm down 2.5%. I haven't closed the trade out, but I'm holding a 2.5% drawdown on that trade. And I start freaking out. Automatically, I know one thing: I'm trading too much, right? And likewise, if I put 5% on a trade and I get 4 losing trades, now I'm down 20%. And if I'm freaking out, I wanted to double my money this month, but I'm already freaking out because I had 4 losing trades in a row, which is not unheard of, right? It happens. So it's like, I've really got to work out if I'm, if you're going to be one of those traders that wants to double your account every other day or whatever that is, that takes a really special mindset where you've got to just buckle down. And, most people, you don't start trading and doing that. Like, for most people, that takes years to get to that point where you're like, okay, I'm not going to risk 2% anymore. I'm going to risk 2.5%. That's a big jump, and people don't realize that. And the other thing, which I talk about in the Daily Trader, is you can turn a winning system actually into a surefire loser if you risk too much per trade, because that string of losing trades will actually guarantee that you blow up your account. And so that's the other thing you have to look at here. It's not just, can you sit through the drawdown? Can you sit through a bad trade or 2 or 3 or 4? But also, if you put too much risk on, if your win rate and your reward to risk ratio are off, in other words, if you have a low win rate and or a low reward to risk ratio, if you put too much on each trade, you're guaranteed to blow up the account. Not you might blow up the account. You will blow up the account. It's a matter of when, So that's a tricky thing. It's really, really difficult to say that this is what's always going to happen, and you're going to double your account this month. So it's hard to answer Dan's question, isn't it? He's saying, what's a reliable?
It is, yeah.
Yeah. So.
The one thing that people have to understand, traders a lot of the time don't understand when they begin trading, is that it takes time and patience and skill to get to the point where you can consistently pull pips out of the market. And if it didn't take those things, everybody would be a millionaire. The main thing is that the time that you put into becoming a trader is very similar to anyone who becomes a doctor or an engineer or a lawyer, because the time spent turning yourself into a trader is essentially an education, right? It's all about education and developing yourself, your trader personality, if you will. So, don't get frustrated because you're not successful overnight is the main thing. Trading for 99% of the people out there that begin trading, it's a long-term end game. It's not going to change your life overnight.
Yeah. Good point.
And because of that, I guess where I was going with that is because of that, you want to make sure that you're preserving your capital, right? So you might have, if you put too much money on each trade, and you have a string of losers, well, you're not going to have any capital to trade with next month, right? So, so you just got to be careful.
Yeah. What else? So, do you apply your money management rules to your back testing? So you size your positions on each back test?
Yeah. Yes, I use exactly the same rules back testing as I do in my live trading. If I changed the rules when I was back testing, then I would have to change them when I was trading, right? So the only thing that has changed for me over my back testing, my time career back testing, if you will, is that I will use different exit strategies. So I will use a trailing stop or like a 3-bar exit or something to that effect to see how often I can maximize my wins, right? But in the end, I've found that most of the time I'm better off to have solid targets based on those support resistance zones rather than just trying to let a trade run forever.
Yeah. Yeah, because you can get stuck sort of trading what the market should do rather than what it does.
Yeah,
Yeah,
yeah.
yeah, exactly. Yeah. Steve wants to know when you're looking at kangaroo tails on the daily, do you take support and resistance levels into consideration and avoid a trade if the reward to risk ratio is less than 1 to 1?
Um,
We kind of just talked about that.
the, yeah, the most important thing about the trade is actually the support and resistance level that it forms on, right? So if it forms, like if you get a bearish kangaroo tail and it forms right after, breaking through a bullish breakthrough to the upside, and you're going to trade right into a zone, then I probably won't take that trade because there's a good chance that it's now that it's broken that zone, it's just going to come back and retest it and then go higher. So I definitely look for space, so that I can get 1 to 1 out of my first target at least.
Yeah. Okay. Cool. Um. Okay. Are there any charts or anything? I sent the link through, so everyone should have that link that I sent through. That has the link, I suppose, to your special deal. Is that right, Rob?
Yeah, that link is basically going to only be valid for the webinar, and
Yeah.
I think it'll be available to Walter.
Yeah.
I think you can. I don't have any problem with putting it on the forum later,
Okay. Okay.
or
Yeah.
in any of yours. So, but it's basically only for members of either Naked Forex Now or the Daily Trader sort of thing.
Okay. Cool.
And so that link will actually that link is what will get you to the special pricing for the members.
Okay. Cool. All right. Thanks, Rob.
Okay.
Yeah.
Yep, no problem.
Are there any charts that you want to look at now, or any trades on the horizon? I know some people probably want to know. Do you have anything?
Sure. I actually I had a quick look before we got started here, and I'll just show you a couple of the charts that I kind of identified an area on. This is the Euro CAD chart, and you can see that the daily kind of have this wick thing here. It's not a kangaroo tail by any means. It's too much of a body, but it is at the same zone as this one over here formed. So I was thinking that possibly on a 4-hour chart, if we can pull back up to this 2870 area, there is a weekly zone. You can see right here. We got zoom out a bit. You can see we got touches here, here, and here. It's not perfect, but it's a pretty decent area, I think, for a 4-hour trade. If we got back up to somewhere around where this yellow box is, and we got a bearish candle out of it.
On the
other
4 hour.
option.
This is the 4 hour.
This is the 4-hour.
Yeah. Yeah. Okay.
Yeah. So I'd be looking for that on the 4-hour. The other option is if this candle closes. I mean, for those that know it, this is the Acapulco, right, Walter?
Yeah. Yeah.
Yeah. So that's sort of what that would be. So but I don't really like to. I would rather see it come back up here and retest this breakout area and then fall again. The other one that I was looking at was the Euro Pound.
Ah.
Pound. And this one's similar. The daily chart had us, move quite high, quite rapidly, right? So we have this zone I've identified a zone at about 80.80 on the Euro Pound, and so what I'm kind of looking for price to come back down here now and test this level, or possibly even this 80, basic 80.90 or 80.95 area. This level here might not be bad either. So we could, even in here, if we had a pullback to this area and then printed a nice bullish candle of some kind, I'd be interested in possibly taking that as a buy. But other than that, at the moment, I don't really see a lot. I like to wait until we get an hour into for the lower time frames. I like to wait until after the first hour of the London session.
Yep.
To identify the trades. But those are two that I'm keeping my eye on anyway. And I mean, basically the idea would be is if we get a bullish candle down at this level, I just move to the daily zone essentially for profit targets. So in this case, the next real zone would actually be probably up here at about 81.70, so it would be 81.35 and then 81.75 or something like that. Would probably be where I would target the for a profit target.
Yeah, cool.
Yeah, unfortunately, I don't see a lot at the moment that I can really that I really feel comfortable calling out to you guys. So.
Right. Okay. Well, Dan wants to know about the CAD, so okay. I mean, I can bring it up if you don't. I saw a couple of trades today. You got it on there? Do you have it on there?
This is the CAD here. This
okay,
is the daily.
Daily, yeah. So, the one that I sent out today, there was two. The first one was that it's sort of a double top, sort of with that bearish candle yesterday on the daily CAD.
1 year and 1 year.
Yeah. So off what was once support, it looks like it may be coming resistance. So I was saying, if you know that red candle to the left of the big red one there, the other tiny red one. So I basically have a sell order below that red candle right there.
This one right here.
Yeah, which is 97.55. Yeah. So if it clears, oh, it looks like you've got one. You're all set up too.
Yep, I've got one there too.
Oh yeah. So that's the same deal. Yeah. So so stop loss above the high, and then so I'm basically hoping that this will break today and get all the way down to 96.85, and then.
And this is actually a good example, Walter, of this isn't necessarily a 1-to-1.
Yeah.
I think the first target is about 70 pips, and the stop is 125.
Yeah.
But that's a great example, and I completely agree with Walter's analysis on the trade because if you look at a line chart here, you can see that price really reversed kind of hard here, right? So the chances of you might as well take some profit before. You might as well take some profit at this point because it will likely, at the very least, just simply pause at this level.
Yeah.
The chances of it actually just pushing right through down to down to here somewhere, where the full 1-to-1 target would be, are probably not huge. So
yeah,
I fully agree with that's one instance where 1-to-1 is certainly not exactly at 1% on your first target is certainly acceptable.
Yeah, I mean so. It's like, I could move my target lower, but if I know that the market's likely to pause and or reverse there, it's just kind of, it just doesn't make sense.
Absolutely.
To me. Yeah. Look, it could totally blow through. It could do kind of what the Aussie did last night and just take off, but you never know, right? But it's unlikely. Those are kind of rare, right? So, yeah.
Yeah, it doesn't always move that far, that fast, in one day sort of thing.
Yeah.
And so there's I'm not exactly sure who the guy is that the quote is from, but one thing is that the most successful traders are traders who take profit regularly from the market. And so this instance here, this would be better to take profit a little bit early and take it. That's part of taking profit regularly, right?
Yeah.
So if you have a high win rate, you don't need to get 1-to-1 and 2-to-1 out of every single trade.
Yeah, that's right. It's critical if you're low on the win rate, and low is like 55%. But if you're up around 80, you can keep taking profit a little bit, quote, early. In fact, that's normally, it's sort of what came first, the chicken or the egg. If I take profit early, it's going to be easier for me to maintain a high win rate. If I start going for 5-to-1 reward to risk ratio, well, guess what? It's not always going to do that. It's going to stop me out or stop me out at break even or whatever. So that sort of thing. It's kind of like I don't really know how to say it, whether you say, okay, if you have a high win rate, you can take profit early. But really, if you're taking profit a little bit early, quote early, that can lead to a high win rate. So it's kind of like
Yes.
daily scalping or whatever. I don't know. I mean, because we're not going for the full 150 pips, we're going for 70 or whatever. So yeah. So it's tricky.
Well, and I actually record all of my trades on a Excel spreadsheet that tells me how often it hits the first target and how often it hits the second.
Yeah.
And the win rate on the first target is around 85% for a big shadow. Win rate on the second target drops to about 60%.
Wow.
So if you look at it from that point of view, that first target, if you're hitting it 80% of the time, you're going to be profitable.
Yeah, exactly.
Your account is going to grow continuously. So
yeah.
85%.
Yeah, because you think about it like this. If you think about it in these terms, in terms of expectancy, you say, okay, let's say you take half profit, and you say 85% of the time you take half profit. So that's we'll call that $1, right? So you're taking $1 at 85% of the time. That's $85. Now, when it hits your stop 15% of the time, then all of a sudden you're losing $2 times 15 or 30, right?
Yeah.
So now you're making $55 on that, and that's not even taking into consideration what happens with target 2. Let's just assume it never hits target 2. So you're making $85 and you're losing 30, so you're still net $55. Okay, so what's this right here?
So this is my spreadsheet, and these numbers right here are based on hitting the first target, right?
Wow.
So the big shadow, over 77 trades in this trading period, hit 82% of the time it hit the first target.
Right.
The kangaroo tail, over 79 trades, hit 73% of the time.
Right. Yeah.
And that's just taking into account the very first target, right?
Yeah.
So overall, the win ratio is 80% for longs and 79% for shorts, so essentially the same.
Yep.
Yeah.
Cool.
This is very interesting. This tool, this is something I've been using for a while now, and it's pretty slick for analyzing your trades, but it does take a lot of work.
Yeah, that's awesome. So
overall, you can see here. Sorry, Walter. So
no, go ahead.
You can see here that what I'm recording big shadows, kangaroo tails. I got a few trendy kangaroo tails, and they're all basically the same trade, right? So overall, you can see that the win ratio here is 79.43%, and this is over the last 2 years.
Yep. That's awesome. So, and those are your pips, your net P&L. And so, Dan says, where can I get that sheet from?
What I'll do is when I record my next video, or I can post it in the forum, maybe better if I post it in the forum later today.
Yeah, they would love it. Dom says, yeah, he seconds that. Yeah, everyone wants your spreadsheet. That's awesome. Okay. That's a lot of work in that. Did you build that yourself?
No, actually, they're kind of a turnkey thing that you can buy.
Yep.
And it's actually a really great tool. Like, it has all this stuff, the expectancy calculator, your drawdowns. It even has a position sizer built in.
Oh yeah.
And then all your you can customize it to the different names for your trades, and here's the trading log. So every trade gets entered, right?
Yeah.
So this is for an account. This account started with 6 figures, and it's basically tripled in 2 years.
Wow, that's awesome.
That's 79.43%.
Yeah, that's awesome. That's awesome.
Yeah, so I'll put a link if you guys want this spreadsheet. I'll put a link to where you can get it on the forum.
Thanks, that's awesome.
Okay.
Dan wants to know if you need a pilot's license to use the spreadsheet.
Well, it does take some time to set up, Dan. I won't lie to you. the thing is that I've customized it, right? So here's let me see here, tracking. No, where is it now? Oh, maybe that was it. Print tracker. There it is. So I've customized it, and essentially I started doing all this. This is a really kind of a great plug for Walter, but I essentially started doing all this tracking here when I took Walter's personal trading course, and so that's why you see all these names in here. The Belt, the Big Mac, the Last Kiss. I mean, these are all trades that Walter is part of his program, right? But you can see that from my trading log that I don't take any of those other ones. So all of my trading is based on the Big Shadow and the Kangaroo Tail in one form or another.
Yeah, exactly. Yeah, so you've got trendy Kangaroo Tails, trendy Big Shadows. You faded a few Kangaroo Tails. That's why the win rate is so high on those other ones down at the bottom, because you just haven't taken that many, so you haven't had.
Yeah. And I guess maybe I might have entered some of them just as standard Big Shadows or Kangaroo Tails and didn't put them under the trendy, for example.
Right.
But overall, when you combine it all together, it still ends up it would end up with the same results more or less, right? So.
Yeah. It is interesting that Monday you have more trades on Monday, like by far, than any other day. That is interesting to me.
Yeah, and they have the funny thing is the win ratio for them, the ones that you enter on Monday, is actually a little bit lower than the Tuesday, Wednesday ones, right?
Oh, yeah.
So
yeah.
But I don't. Yeah, I mean, it's just something that's quite interesting. But look at the number of pips, right? So even though it's got a lower win ratio, it's by far made the most pips. So So the trades entered on Monday have made basically 5,000 pips, which is 30% more than any other day. So
Yeah. And the payoff ratio is greater for Monday than it is, say, for Thursday.
Yes, yeah.
Right.
2.09 compared to 0.85. So.
Yeah. Okay, cool. Well, that's really cool. People are really happy about that. So it's not synced to your trading platform, obviously. You put the data in manually, right?
No, it's totally manual. Basically, what I do is every time I take a trade, I enter it into the trading log over here, and these things have got so I've got most of the currency pairs entered. There's a drop-down list for most of the currency pairs, and I think this one's locked right now, so I can't pull it up. But so a lot of the information is entered into it already, and you can just use a drop-down list. But it is a lot of work, and I mean, if I was trading lower time frames, I don't know that I would have the patience for this.
Sure. Yeah. That's. Yeah.
I mean, if you're trading, 1 hour charts quite frequently, it would be a lot of work. But I trade pretty much strictly daily, and so it's to me it's worth it because it gives me an immediate snapshot of what I'm doing. And I guess one of the things is that with services like FX Stat and MyFX and things like that now, where they calculate all of it by just attaching to your trading account. Maybe this isn't quite as essential, but the problem with that is that those services don't tell you which strategy is working the best, right? All they do is they tell you your overall return rate and stuff.
Yeah, exactly. So you'd have to essentially set up an account for each strategy or something like that if you wanted to.
That's right.
Yeah. So no, this is cool. I think anything that takes you out of your left brain emotions and sends you right back into your out of your right brain sort of emotional thinking and sends you into this kind of, because you can't fill in a spreadsheet like this if you're thinking about dreams and the clouds and the fairies. You know what I mean? Like this is total analytical, and it's great. It's a great mindset to be in when you're pulling the trigger on a trade. You know what I'm saying? Like it's a great. Yeah. This is so cool because we want to be robots. We got a signal, let's go. That sort of thing.
Well, and
Yeah.
this is one thing I like about this is that this to me is even better than Forex Tester because this is based on every live trade I take, right?
Exactly.
And it constantly updates the win ratio, and the all the information is constantly updated, and it gives me a lot of confidence when I see a setup on the chart, to know, okay, 79.5% of the time this trade is going to work out.
Yeah. Yeah.
So
Yeah. Exactly. Okay. So cool. So Rasika says that you can put tags on trades in FXStat, FXBook. Okay. Thanks. Great. That's good to know.
oh, that's cool. Okay.
That's excellent. And Robert just was wondering if you can get monthly and yearly reports out of your spreadsheet, or is it just overall the last 3 years?
Yep, I can. I can break it down to the month, to the year, to the day, whatever you want to do.
Cool. Cool.
To the week. So
Yeah.
it's just a matter of sorting it by the date and printing a report from it, or pulling a report out.
Excellent. Yep. Okay. Cool. Well, thanks for posting that on there. So, thanks for offering the deal on the Forex Rem too. That's pretty cool. You can make 100 pips a week, or 60 and 80 pips a day trading, and watching some pros go at it. That's to me, that's worth it. That's well worth it. And obviously, those people that want to get in on the Forex Rem, you can also get the bonus with me, the 3 webinars on the 1-hour reversal system. Well, we might trade 4-hour too.
And I'll try to attend those too, Walter.
Awesome.
If the timing works out.
Yeah, that'd be great. That would be great.
Yeah.
So Dom says, thanks for your time, Rob. It's been a blessing. Yep. And some people can't believe you came from a factory after they saw your spreadsheet. They think you're like a physicist or something. A pilot. Yeah. Yeah.
Yeah. Well, I actually have a pretty good education. It's just at the time, it's funny how your career path sometimes takes you in places you never thought it would. So.
Oh yeah.
Yeah. Yeah.
Agreed.
So
yeah.
That's It probably wasn't my first choice.
Yeah. Okay. Thank you, Frank, for spending time here. Thanks, everyone. Michael says it was awesome. Marky says thank you, Rob and Walter. Thanks a lot, says Lori. Awesome session, says Steve. Thanks a lot for your time, says Rasika. Great as always, says Alex. Thanks so much, everyone. I really appreciate it. This was so great, says Robert L. Thank you big time, says Dan. Well, thanks to you guys for spending time here, and thanks to everyone who wasn't able to make it but's watching the recording. And thank you, Rob, for your time and showing us how you approach your trading. And you can see here, guys, that it really takes that specific mindset of making it a job and being very critical and very analytical about your trading, like Rob has done. And that's really how he's been able to do what he's done. So that's excellent. Thanks, Rob.
Thanks, Walter. And thanks, everyone, for joining us.
Yep, there will be a recording. I'll put it on the forum, Robert. Okay. All right. Thanks so much, Rob. Take care, everybody. Have a good week.
Okay, everyone. Have a good one.
See you, Rob. Bye.
Bye-bye.
See you.